Assalamualaikum. In this video, I'm going to show you on how to prepare the statement of cash flow using indirect method. Okay, we are going to do past year question of FIN658, December 2018, Part A, Question 1. So now let's have a look at the question. Alright, so this is a question given. Graphic is a company dealing with commercial arts and graphic designs. Founded in 2008, the top management agreed that this is a time for Graphic to rebalance its business strategies. As a financial analyst, you are required to thoroughly assess Graphic's financial status using the information provided. So the information provided is a statement of financial position as at 30th June for the 3 financial years, okay, which are 2016, 2017 and 2018. So the financial position, alright, is the balance sheets of the company. And then given the statement of financial performance for the year ended June 30th for the year 2016, 17 and 18. So this is also called as the income statement of the company. And then the question also provides us with the year-to-year change statement of financial position, okay, for the 2018 and 17, all right, for the statement of financial position, and also the year-to-year change statement of financial performance, okay, for the year 2017 and 2018. All right, so now, okay, we are going to look at the question. Alright, so today in this video, we are going to answer A. Okay, so using the provided financial statements, conduct a comprehensive analysis on Graphic to identify strengths and weaknesses of its financial position. Alright, so A, prepare a statement of cash flow for Graphic for the year ended June 30th, 2018 using indirect method. Okay, as you can see here, so this is the template for us to construct the statement of cash flow for the year ended June 30th, 2018. Alright, so we are going to divide the cash flow into 3 main activities, okay, which are operating activities, investing activities, and the last one, cash flow from financing activities. Okay, so we know that we are going to prepare the statement of cash flow using indirect method. Okay, so according to indirect method, we are going to start the cash flow with the net profit or net loss. Okay, so looking at the question given, okay, in the income statement mentioned that the company is incurred loss. Okay, because the negative figure, okay, in the bracket means net loss. So that's why we start here. Net loss of the company is, okay, a negative 14,521. Okay, next step is to plus or add back the depreciation because the depreciation is the non-cash expense. So that's why we add back the cost of the depreciation. So go back to the question and check how much is the depreciation, okay, for the year 2018. So looking here, the depreciation is 7,651. So we are going to plus back 7,651, okay, here. Alright, okay, and then okay, we are going to plus any cash inflows. So please note that, okay, the decrease in the current asset, okay, we considered cash inflows. Any increase in the current liabilities, okay, we'll consider cash inflows. Alright, so we go back to the question, okay, and then check the balance sheet because we're going to check the current asset and current liabilities. Okay, so the cash and bank balances is excluded. So we are not going to record it under the operation because we are going to record it at the bottom part, okay, of the bottom part of the statement of the cash flow. So now we are going to check other than cash and balances current asset. So here we can see the trade and other receivable. Okay, it's a current asset. So we look at the comparison from year 2017 and 2018, whether the figure is increasing or decreasing. So 2017, the trade and receivable is 24,898. Okay, we can see that the trade and other receivable decrease, okay, in year 2018. So where do we record the decrease? So looking at the cash flow, so any decrease in current asset, we'll consider cash inflow. Why cash inflow? Because, alright, year 2017, 24,898. Okay, and then it reduced to 24,633. Meaning to say here, we are receiving money from our receivable. Ataupun receivable tu, account receivable had paid their the debt ataupun the receivable. So that's why the hutang tu, the debt of account receivable ni is reducing from year 2017 and 2018. Okay, it's an outflow for that debtor, but then it is an inflow for us because they are paying us the money. Okay, meaning to say here, the money comes in. So that's why any decrease in the current asset, okay, such as the account receivable, we consider or we record it as our cash inflow. So the trade and other receivable, okay, is recorded as cash inflow. But how much do we record? Okay, we are going to record the changes. Okay, changes. So how much is the changes? So 24,898 we minus with the 24,635. Or otherwise, okay, we can refer to the year-to-year changes given, okay, in the question. Alright, so it reduced by 263 here. Okay, so you don't have to calculate it, you just can take the figure right away from the year-to-year change statement of financial position. So this is a changes in RM, so this is a changes in percentage. So we are going to record the changes in RM. So because the negative figure, meaning to say here, the trade and receivable is reduced by 263. So we are going to record the cash inflow 263 here. Okay, next we are going to go back to the question and check, okay, is there any other current asset and liabilities to be recorded? Alright. Okay, so we have here, okay, inventories. Alright, so inventories from 46,140 increased to 46,412. Okay, so meaning to say here, graphic buy more inventory. So that's why the inventories increase in year 2018. So when graphic buy more inventories, meaning to say here, that is cash outflow. So that's why we are going to record the inventories, the increase in the inventories, okay, is as cash outflow. Okay, inventories, so outflow increased by 272,000. He buys, the company buys more inventories. So that's why it is an outflow. Okay, next, go back to the question. Okay, there is no more current asset. The plant and equipment is the non-current asset or fixed asset. So we go to the liability side. So the liability, we have the trade and other payable. Okay, so for the trade and other payable, 2017, okay, the company has 33,004. And then for 2018, it is decreased to 32,140. 148. Alright, so it means here, the trade and other payable reduced, meaning to say graphic has paid to their supplier. So when the graphic paid to their supplier, meaning to say the cash outflow. So that's why here, decrease in current liabilities we consider as outflow. Okay, so we record here trade and other payable, okay, as outflow. Okay, so decreased by 856,000 because it is an outflow. All right. Okay, and then we go back to the question and check, is there any other liability? So we have another one, liabilities, that is accrual. Okay, so accrual reduced from 663,000 to 174,000. So reduced by, okay, it is reduced by 489. Okay, so this one is also the same concept. All right, with just now, when the decrease in the current liability, meaning to say the graphic has paid their accrual. Okay, that's why the accrual reduced, so it is considered as cash outflow. So decrease in current liability, we record as cash outflow. So accruals, okay, will be recorded here under cash outflow. Alright, sebanyak berapa dia bayar tadi? Dia perbezaan tadi 489. Alright. So if we go back to the question and check again, is there any other current asset and liability? So trade and other receivable, we have recorded. Inventories have been recorded. Trade and other payable has been recorded. Accrual has been recorded. Okay, for the short term, long term, okay, it's not the current liability. It is for the under financing activities. So there is no more current asset and current liabilities left. So we can sum up. All right, I'll total up this cash flow from operating here. Okay guys, so to total up the cash flow from operating is equal to sum of, okay, all of this cash flow. Okay, and then enter. So we get the cash flow from operating, CFFO, is negative 8,224. Alright, so next let's continue with the investing activities. Okay, so for the investing activities, we are going to record the cash inflow if there is any decrease in the non-current asset. Okay, meaning to say if there is decrease in the non-current asset, the company has disposed, okay, it's fixed asset or the non-current asset. So that's why the money comes in and then we record as a cash inflow. And we are going to record the cash outflow when there is an increase in the non-current asset, meaning to say the company is buying more assets. So that's why the cash outflow. So please take note here. If the company buy fixed assets, okay, the changes of the fixed asset must be added back with the depreciation value. Okay, so let's go back to the balance sheet. So we have plant and equipment. So it is increased by 8911. Okay, this is a year-to-year changes. Increased by 8911. Okay, where do we record? So increase in the non-current asset. Okay, plant and equipment will be recorded as an outflow. But then we have to add back the depreciation value. So the changes just now 8911, we plus back with the depreciation value, which is 7651. Okay, we just add back 7651. Alright, and then we are going to record here the cash outflow. Okay, negative 16,562. Okay, next, let's go back to the balance sheet and check. Okay, the company still have another fixed asset or non-current asset, which is investment. Okay, that is increased in value by 11,000. So we are going to record it as the cash outflow. So investments, okay, increased by 11,000. So we record as the cash outflow because the company buys more investment. All right. So here we get the cash flow from investing, CFFI, okay, equals to negative 16,573. Okay, next is the financing activities. For the cash flow from financing activities, we are going to record plus the cash inflows if there is any increase in the long-term liability. Okay, and then we are going to minus cash outflow if there is any decrease in the long-term liability. Okay. So increase in liability, why? It is cash inflow, because when we borrow money, let's say the short-term borrowing increase, okay, we receive the money when we borrow money. So that is the cash inflow to the company. Okay, same goes to the long-term borrowing. If the long-term borrowing is increased, meaning to say the money comes in because we receive the money from the borrowing. Okay, alright. So we go to the balance sheet, and then the item to be recorded under financing, we know that the short-term borrowing, okay, increased by 4215. So it is an inflow for us. So we are going to record it under cash inflow. The short-term, okay, borrowing, all right, so increase by 4215. Okay, 4215. And then next, we have long-term borrowings, okay, also increased by 7916. Okay, so an inflow for us. So long-term borrowing also increased, meaning to say we are receiving the money comes in. Okay, the changes is by 7916. And then what's next? Okay, the deferred tax liabilities. Okay, so the deferred tax liabilities also increased by 433. Okay, what is the deferred tax liability? Okay, it is the tax that are owed but are not due, to be paid until a future date. So that is an obligation for the company to pay the tax in future. Alright, so when the amount is increased, sama juga macam liability. So meaning to say dia belum bayar lagi. So that is an inflow to the company. So we are going to record the deferred tax liabilities. Okay, increased by 430. So as an inflow for the company. And then the last one, okay, the item in the financing activities, we should record the dividend. How do we calculate dividend? So to calculate dividend formula is equal to net income for the current year plus retained earning of the beginning year minus the retained earning of the ending year. Okay. So here the dividend, okay, net income 14,521. Okay, we go back to the income statement. The net income of the company is negative 14,521. And then we are going to plus with the retained earnings, okay, retained earnings of the beginning year, which is 22,302 for the year 2017, okay. And then we minus with the retained earning of the ending year, which is 20,703, the retained earning for the year 2018. So that's why here we get the dividend negative 12,922. Alright, so please note that if the dividend is positive, meaning to say the outflow, company is paying dividend. Okay, but then if the dividend is negative, it means the inflow to the company, because the company is not paying the dividend yet. Okay, not paying the dividend yet, but to be payable. Okay, so that's why we record here the inflow, which is the liability to the company to pay the dividend. Okay, so the dividend payable. Alright, so increase the inflow for the company because the company is not paying the dividend yet, sebanyak 12,922. Okay, so that we go back to the balance sheet, and there is no more items for the cash flow from financing to be recorded, and then we can total up here is equal to sum of, okay, all of these items. Alright, and the enter, so we will get the cash flow from financing is equal to 25,483. Part of our statement of cash flow is total up, or to find the net cash flow here. Okay, so the net cash flow is equal to CFFO, cash flow from operation, plus CFFI, cash flow from investing, plus CFFF, cash flow from financing. So we total up here is equal to sum of, okay, sum of the total here. Alright, operation, investing, and financing. Okay, Alright, so the total or the net cash flow for the graphic is 686. Okay, so which the 686 ni you can check with the answer with the in the question given in the net cash, net change in cash in the question. Alright, so here net change in cash, cash and bank balances, the changes is 686. So it must be tally with here. Okay, and then plus beginning cash. So beginning cash, you can refer to the balance sheet. Okay, beginning year 2017. So cash and balances for the year 2017 is 11,799. Okay, 11,799. Alright, so here is equal to the cash and bank balances as 2018 is equal to sum of, okay, net cash flow or net change plus with the beginning year. Alright, so it must be equal to 12,485. So which this one should be tally with the cash and balances for 2018. Okay, given in the question. Sama tak? Okay, 12,485. So it must be tally here. Alright, our net cash flow calculated above, okay, is equal to the net change in cash. Alright, and then plus with the beginning 11,799. So it must be equal to 12,485. And this one should be tally with the cash and balances as 2018. So I think that's all for this video. Thank you.